is to start from a mathematics angle that actually I just show you just now. Okay, so let's say we have a games here. Okay, you will need to select. So we have scenario 1 and scenario 2 here. So let me tells you the truth. Okay, so the first scenario, the game of this trick is the scenario 1, your winning ratio is 50%. Scenario 2, your winning ratio is 40%. So if you play the scenario 1 game, so in 100 trades, every time you win, you will win 100. Every time you lose, you will lose 100. In scenario 2, the winning ratio is 40%. It's lower than 50%. Yeah. So here, every time you win 200. Every time you lost 100. So I will launch a poll. Okay. So let's see our audience today, which one you will choose. Also, pick your preferred game. Pick the one that you want to play with. Scenario 1 or scenario 2. Okay, so in 10 seconds, I will end this polling. Take your time. Okay, let me show you the result now. Okay, so hopefully you can see from the screen. So 81% of today attendance, like yourself, pick scenario 2, and 19%, maybe 20% of them pick scenario 1. So definitely you did a calculations. Okay, so only you do that. So if you didn't do a simulation on these 100 trades for scenario 1, scenario 2, you will definitely pick scenario 1 because of just by looking the winning ratio. Okay. So if you do a simulations, actually everyone will have the same result. Okay, so let me show you. Okay. So in scenario 1, you won't be profitable with a winning ratio 10% higher than scenario 2 because every time you win 100. You lost 100. With a 50% winning ratio, it means you win 50 times, win 5,000. You lost 15 times, 50 times, lost 5,000. So you are not profitable. So like what Chin is saying, in this scenario 1, you won't be break even. You will actually lost because of charges, of trading charges. You will definitely lost money in scenario 1. In scenario 2, even with a lower winning ratio, but because every time you win 200, so you win 40 times. The 40 times will bring you 8,000 ringgit. The 60 trades lost 100 ringgit, you will be 6,000. So your net gain is 2,000 after 100 trades. So in this scenario, you're still able to cover the cost and you're still able to profitable. And this is a simple logic. And this logic actually is it go beyond how to buy and how to sell. It means if let's say we treat the market movement is like flip coin, like random walk. It means if a monkey go and click buy sell in the keyboard, 50% of the time he will pick the right direction, 50% of the time he will pick the wrong direction. If we apply this risk reward to the scenario 2 method, it means buy sell becomes a random thing, but how to exit it becomes a more crucial thing. I hope you hear me, because this is the basis of the trading strategy that I want to show you. I developed that trading strategy based on this idea. It's not about how to buy sell, but of course, when I try to filter more sideways movement, then I will implement some indicators, but this is the starting. So if you understand this, that means you understand the whole idea that the trading strategies that I'm going to show you. So Asari is asking net gain 2,000 minus the cost, how much? It depends one trade, how much the broker charge you. So if let's say 5 ringgit, So 100 trades is around 500. So if 10 ringgit, 100 trades is around 1,000. Yeah, things like that. But of course, this is just a simulation. In real trading, a risk reward to 2, and every time you only earn 200 is not enough. It's definitely not enough. We need more. And we didn't take into consideration of leverage here. Yeah, it's not plain capital. In future trading, we have leverage. So things like that doesn't take into account in this scenario. This is just try to bring the entire ideas of risk reward ratio is crucial. And if the market is random, yeah, you need to have the idea. Buy sell is important, but how to exit is more important. Yeah. Okay, so come back to this. If let's say exit is important than entry, it means if every time I follow a risk reward equal to 2, my winning ratio of 34%, I will be break even. Yeah, it means, of course, the lesser the better. If my risk reward is equal to 3, then definitely it will go below 34%. So here comes to the entry. Here comes to the trading idea. So if I have a trading strategies that give me a winning ratio of 50%, and if I have a risk ratio equal to 2, it means I will be profitable just by looking at this 2 angle. Winning ratio more than 34%, risk reward equal to 2. Okay, so I start thinking about that angle. Then there's some way to do that. So for example, every time market open 10:30 FCBO, okay, 10:45 you go and long. You go and long the market if the market trade higher than previous day closing, you can do that. Then you long with a 10-point take profit target and with a 10-point cut loss target. Okay, so we are talking about risk reward equal to 2. It means if today opens is higher than previous day closing, then we go long at 10:45 with a profit target of 20 point and with a cut loss of 10 point. This will give us a risk reward equal to 2. But this is not a good idea. It's because there are times the market is very quiet. If you can recall, before 2019, FCPO market is so quiet, is so low volatility. I've been living in a low volatile market for many years because Bursa market tends to be calm. Shouldn't use the word quiet. Calm, very calm. Yeah, until there's a big sentiment come in, like now in FCPO. So we need a smarter way. Then we need a volatility indicator that is ATL. The ATL tells us the current volatility. Okay, if the current volatility is lower than 10 point, we should take that. We shouldn't take 10 point. 10 point is what you're asking, but the market is not giving you that volatility. You shouldn't go for that. Yeah, you should go for what the market is giving you. Yeah. So average true range actually helps us to solve that. It's basically invented in 1978. Yeah, it's a very, very good indicator that tells you how much the market can move. Okay. So basically, a true range is the current bar compared to the previous bar. So there will be a few scenarios. The current bar high or low compared to the previous bar closing. So we will take into account the maximum one, the maximum scenario. If high compared to the previous bar closing price is larger than comparing low to the previous bar closing price, then it will take the high, the differences between the high and close for these 2 bars of true range. So you will do for 14, add up the 14 true range, then divide by 14. That will give you the volatility of the current 14 bars market range. Yeah. So this is an example of FCPO daily chart. So this is like 2 years ago, but it's still a very important graph if you read it correctly. Okay. So we have average true range here, 14 days. So this is a daily chart. You see the average true range is dropping. See that? Yeah. It means if you are trading FCPO in 2017 to 2018, or maybe until 2019, end of 2018, you will be very, very difficult. You will be struggle to be profitable in FCPO market. If in that 2 years you were able to break even or earn money, it means you have a solid trading plan that definitely can be very good, can be performed very good when the market range increase. Yeah, you see the average range is reducing. That with the time I'm designing this trading plan, and that the time I understand that market volatility is so crucial. Yeah, why I want to emphasize this again. Yeah. So if let's say you are trading this time, when the average range is increasing, you will definitely have better performance than trading this period and this period. Okay. So if exit is important and we don't want to fix our range, we can use ATL to derive that. So every time I enter a position, one ATL to cut loss and two ATL to take profit. If the ATL is 10 point, then it will be 20 point to take profit from where I entry and 10 point to cut loss. Yeah, that's it. And so I want to test these particular ideas. Okay, this idea. So I need some very simplified rules. So I will just buy when there's a 4-bar high and when there's a 4-bar low. Okay, so what is a 4-bar high? It means, let's say I have a few candle here, candle 1, 2, 3, 4. Okay, I have 4-bar here. So the 4-bar high will be this. Okay, so 1, 2, 3, 4, the highest price will be here. Okay, if the 5th bar go higher than this, trade higher than this price level, so I will go long. I will go long at the highest of this bar, or go long at here. It depends on the market movement. Yeah, if the usually I will go long here and take more risk. Yeah, because if it's a good trend day, usually it will come back. It won't come back. If it's a low volatility, okay, you can look at daily chart to do that. Then you can wait here. You can wait this price level. You buy a limit order, wait it come back. Yeah, things like that. So just a simple idea to test. Okay, then I use 4 years data. So my testing period is 2013 September to 2017 October. So that was the time the market has a few structures. The market have high volatility movement, declining volatility movement for 2 years, like what you've seen. Some small bull, small bears, big bear within that 4 years period. So which is a good testing period that we want. We have sufficient price structures to test the idea. This is a good one. Then the source of data is Telecode. So I try Bloomberg data, I try Nextview data. I feel Telecode data cleaner. Cannot be say it's very clean, right? It's cleaner. Okay. And the training period, testing period, okay, will be 10:45 to 5:45 to avoid the opening gaps and the closing fireworks. Last time we have that. So before we move on, some questions here. Yes, Mr. Mokhtar, you have a CDS account for equity stocks trading. So if you want to trade FCB or oil futures, you will need a futures account, a margin account. So you will need to open a futures account, of course, with RHB Investment Bank. And the platform is, we have 3 platforms, AES, CQG, and QSC, all come with a mobile application. Yeah, so now it's very convenient. It's not like last time. Speak to who invited you. Maybe it could be a dealer. If you don't have a futures dealer, drop us an email. We will find someone for you, near to you. The nearest location to you will be the preferred branch location for you. Mr. Lim asking, can you share Fibonacci analysis on TradingView? Yes, but not today. Maybe second quarter. I'll organize some Fibonacci workshop again. Yeah, look at the latest market sentiment. What is the recommended capital for FKRY? If you go back to the earlier slides, it will be 2% risk per trade based on the time frame that you're going to trade, and or 30% of margining. So we are saying 30% of margining. It means now FKRY is 4,002. You divide by 30%, it will be 16,500, I think. Yeah, for one lot. Backtesting, could you recommend a backtesting? RHB don't have this function. I can't test strategy. Yes, you can test strategies. I test strategies by building Excel. My colleagues doing in Python, and TradingView also can help you to do some back testings, but we can't customize much in TradingView. So usually people will test in Python or test in Excel, like me. Okay. And some trading software like Meta Stocks, multi charts. The multi charts, yes, and there are some a lot. Even MetaTrader also can do backtesting. So mobile apps, too limited options anyway to improve. So what kind of options you are asking? Can ATL trading plan work with stock futures Bitcoin? You will need to try it, Calvin. Everyone has a different approach. I don't know how you use ATL. Sam is asking if my capital is 8,000 and risk 2% risk, can I risk only 160? So I will be stock out very often. How to manage that premature exit? So you will need to increase your capital or reduce your trading time frame. Stephanie asking 30 margin on capital is fixed rule or just a reference? The lower the better. If you can use 10% margin, that is the best one. Yeah, it means you reduce your leverage. It means you reduce your systematic risk, the market risk. Sam is asking when ATL is dropping, we increase the contract size to get same amount of return. No, depends your your trading age. What I mean trading age is if your trading plan is a trend following strategies, you shouldn't trade on a market that ATL is dropping because it don't have that volatility for follow through. When you are trend following, you're trading on breakout or things like that, you want to enter when the market able to move to that direction with a certain range. If that doesn't happen, you will have difficult noise. Maybe you will exceed it in break even, things like that. So not. So the answer for you for increased contract size is no. It's about the market. It's not about the money management. Okay, so we'll continue to test this strategy. So I'm not applying any money management. It will be one lot. Okay, so the entry will be 4-bar high to enter and 4-bar low to sell. So the exit is based on 1 ATL from entry for cut loss, and take profit will be 2 ATL from the entry. Okay. Okay, so this is example of the testings. Of course, it's not presenting in a visual way, but it's in Excel. So it coded in the Excel. So to find out what happened. So 4-bar low, we have a sell signal here because there's a 4-bar low. So you can count. This is 1, 2, 3, 4. So this 4-bar. Okay, the 5th bar go lower than the 4-bar lowest point, which is the blue line level, the blue line price level. So one is shorted. Immediately look at the same signal bar. Okay, the ATL is around 6, so we will be 6 point away from the entry to cut loss, 12 point below the entry to take profit. So this will be giving you a risk reward equal to 2. Okay, then the testings will definitely do for the rest. Let's say you have another sell signal here. Yeah, so it won't take this sell. The Excel will ignore this because you're still holding a position until you take profit. Yeah, until you take profit, no position, then the testing will continue. So you will take another sell at the next day. Okay, remember we will do intraday only. So whenever the position is not closed, it will close at 5:45. This is the entire idea of intraday trading in the Excel. The Excel must code in that way to test our idea. Okay. And this is what happened. You have multiple buy, sell there, okay? Then this is the result. So the result I put it in a table form for that 4 years. Let's read it, okay? In the first session, we talk about this, so let's read it again, okay? We have a total P&L of 5,700 points. So you will need to times 25. It means across the 4 years, in all the tradings, this gives us 125,000 of profit. It's not net profit, it's gross profit. and the total trade is 2,600. The winning ratio is 44%. Okay, so here we definitely know the risk reward is near to 2. Okay, why I know that? Because you can look at the profit factor. The profit factor is actually using the total positive trades divided by the total loss. Then I get profit factor 1.94. It means every 1 ringgit I lost, every 1 point I lost in the market, I will compensate with 1.94, is near to 2. There's a reason why it won't be 2, even we are following the exit rules of equal to 2 ATR. That because we will close at 5:45. There are times when we close a position for intraday purpose, it won't be closed at 2 risk reward. Yeah, that's why it reduced. Then the other angle is the total trade is quite big, 2,600 point. Let's say you pay 10 ringgit, you'll be 26,000 paying for charges. Of course, we still earn 100,000 from there. Yeah, so still not an issue, but definitely there are things to improve. So looking at the data, okay, there are 2 issues we can improve. First, I did not put any filtering for the initial testing. Okay, means the winning ratio can be improved more than 44%, because less than 50% it means we are worse than monkey already. So we definitely better than monkey. We should go more than 50%. Then the other one is, when we increase the winning ratio, can we retain the profit? If yes, it means we are reducing the total trades. So if we are reducing the total trades, it means the trading cost also will decrease. So these are the things that we can enhance. So from the overall result, it's actually telling us the risk reward equal to 2, it actually work. Yeah, it will work. Okay, and because of seeing this no filtering trading, the entry have no any indicators of filtering. It just 4 bar high buy, 4 bar low sell. So there are a few questions, so maybe I answer first. If I didn't know Python programming, any other suggestions? What formula to use in Excel? Is there a use in Excel? Sorry to tell you that to code in Excel is actually using simple formula, if, and, or, max, min, things like that. But it's the user to combine all these things. So in a formula, it can be damn long, it can be huge. Yeah, it can be many lines to just code one thing, because the user must implement the idea here. So what data to take, what to ignore, things like that to code into it. So to do a backtesting workshop for Excel, the answer is yes, to tell you what is if, what is and, what is all. But to cook everything together to make it a good soup, it's up to the user, you understand? So I can't do a workshop on that to tell you what to do, because the user must know the function and know how to use the function and code the formula. Yeah, and Excel backtesting is very difficult. Yeah, because every cell you have one formula. It actually slow down the entire testing. Python is a better one. Python, one code of line, 搞定. Yeah. I use mobile GTS for trading. I only can set cut loss, take profit, only able to one. Yeah, you can. Yeah, you can use you can use the desktop PC version. Yeah, use the PC version to park your OCO. Yeah. And by the way, CQG can also do OCO in a mobile. Yeah, so it depends on the charges, your trading volume, things like that. Fortunately, you have the dealers to help you. So I think not to worry. If you want a better mobile apps, CQG, but there's a cost. The cost will be higher to use it. Okay, so now we talk about optimization. Okay, so optimization is actually something like, if this combined with that, what will be the result? Yeah, it's like something you use moving average, you use two moving average crossover to give you a buy sell signal. So which combination gives you the best result? So this is optimization. So why I say Excel is a bit slow, because to show you this table, you will need to run 1 or 2 hours at lunchtime to able to show this result because of so many line of codes. Excel, i7 can run faster, of course, yeah, but it's still very slow. It will take 5-10 minutes, even in i7. So this is a result that another angle to look at the exit is important than entry. So why we are using 4 bar high, 4 bar low, and why not 5 bar high to 2 bar low, or not 7 bar high to 6 bar low, things like that. Yeah. So this actually answer that. Yeah. So the first line is the bar high, the high. Okay, the high. Then this will be a low. So you're seeing 1 bar high, 1 bar low. It means 1 bar high to buy, 1 bar high to sell. Then the exit will follow 2 ATL, take profit, 1 ATL cut loss. Then this is the result. Yeah. So these are all the result of the combination. The best result for the same set of data, the 4 years data, 15 minutes time frame, will be 6 bar high and 4 bar low. Okay, but that is not important. So when reading the data, is not try to look at the maximum profitable combination. It's actually look at overall. So look at overall what you see. You see it's all positive. It's all making money. So the lowest could be this one, earning 4,000 points. The highest is earning 5,007 points. So you have a range of 5,007 points and 4,000 earning by changing the parameters of entry. But that is not important. The important is all entry make profit. Why? Because again, and the trading edge is not come from the entries, come from the exit. It means the 2 ATL things really work. It doesn't matter the entry. And that is what I want to see. Okay. So the other question is why I pick 4 bar high, 4 bar low. Okay. It gives somehow skill to the highest profitable ratio. And the other one is we must be realistic. We are doing this in an intraday manner. It means we need the market to give us sufficient data to enter and sufficient movement to exit. Okay, so look at FCPO market, how many 15 minutes bar we will have one day. So the market open from 10:30 to 12:30, we have 2.5 hours. Okay, then from 2:30 open until 6, we have 3.5 hours. Okay, 3.5 hours. So we have around 6 hours trading day. Then each hour we have 15 minutes. We have around 24 15 minutes bar. Okay, 24 15 minutes bar. It means if we implement these trading strategies, 4 bar high, 4 bar low, we will have 6 times price movement for that particular signal for us to cut loss and take profit, which is reasonable. If you increase it to 8 bar high, 8 bar low, it means you only have 3 times of the market movement for you to take profit and cut loss, which doesn't really tie on the intraday purpose. Intraday trading, we need market movement, so we can't be using high parameters to do that. So I feel 4 bar high, 4 bar low is fine. That is fine. So I just stick to it. The other one is why 2 risk reward ratio? Why not 3 risk reward ratio, and why not 4? And so the combination of 2 risk reward ratio, it can be 2 ATL cut loss, 4 ATL take profit, also will be risk reward equal to 2, or 4 ATL cut loss, 8 ATL take profit, the risk reward also will equal to 2. So why not the other? Why will be 1 ATL and 2 ATL? Okay, so to answer that, optimization also can be that. Okay, so here look at the heat map. The heat map, the most green one is tell you the best combination. The best combination is actually 2 ATL to cut loss and 4, 5, 6, 7, 8 ATL to take profit. So that will bring the risk reward equal to 2 or 3. So the reason I still stick to 1 ATL is for illustration purpose. But if you look at this table, 2 ATL to cut loss and 4 ATL to take profit is a better manner. You see the improvement. And this is on FCPO 15 minutes. So I'm doing optimization on understanding my strategy. It's not trying to fine tune it, make it to become more profitable. If you if you do optimization using some kind of software, things like that, usually it will lead you to the dead end. Okay, why I'm saying this? So for example, you have a data look like this. They look like this. And you put two moving average there. Okay, two moving average there. So you try to understand which parameters that give you the best profitable result on this set of data. Okay, so with this set of data, of course, wherever trading system or Excel will tell you, oh, maybe use 5 and 9. So the moving average short one will be 5, the slower one will be 9. Okay, something like that. Then you implement this on real-time trading result. I will guarantee you will make losses. Why? Because you are actually assuming the market will move the same manner. Where got market will move the same one. If the next structure, the market don't move like that, it move like that, then GG.com already. Yeah, you understand that optimization is not to make profitable trading strategy. The trading strategy must come from the edge itself. Optimization is to understand your trading strategy. Yeah. So if you don't understand data computations or the logic behind, if you do that by just using the function in the trading platform, then it will lead to a bad result. Yeah. So everything we do, we must have a logical sense behind. Okay. Then the other is about winning ratio. Okay. So winning ratio, usually many people will try to search for the highest winning ratio of trading strategies, because if you are trading with a 99% winning ratio, it means your trading psychology will be reduced and you will be a happy man everywhere. You walk here, walk there, go to toilet, you also feel very happy because your trading winning ratio is 99%. You don't have any trading psychology to take care. Yeah. But remember, risk reward to 2, break even winning ratio is 34%. It means winning ratio is kind of a myth. Yeah. We don't need high winning ratio to be profitable. Or high winning ratio, it could be lead to losses as well if you do it wrongly. So this optimization will tell us this particular trading plan 4-bar high enter and low 4-bar high low enter and 2 ATL cut loss and take profit. So the highest winning ratio is what? Is 79%. Okay, you see. But I will guarantee you 79% winning ratio, it looks like very good, but it's actually a very, very bad idea. Why? Because you enter here, let's say you have a long. Okay, you are taking 8 ATL losses. See that? 8 ATL. And 1 ATL to take profit. So this is that much of losses, and this is that much of profit. Okay, yeah. So of course the winning ratio will be good because you let the market to fluctuate like that. Then until here only you take profit. Of course you're good. It's no this don't need any testing. And the logic will tell you, okay, this will give you a high winning ratio, but your P&L may not be good. So the most optimal winning ratio is actually 58-59% here. Why? Because remember just now the most profitable car loss point is 2 ATL, which is here. And most profitable take profit ATL is actually more than 4. Yeah. It means the most you can get is 59-60%. Okay. Then if you want most profitable, the result will scale to 57%. So it will stay at 57%. So 57% is the maximum of winning ratio that this trading strategy will give you. Yeah. Then of course, 1 week's ATL, you have a very low winning ratio, and because it's very choppy, easy to hit the cutoff. Okay, I have some questions there. Okay, let me take it. What do you think about Kenneth channel? If you use the basic ATL as well, you can try. Definitely, you can try. Actually, I'm using Donchen channel. Donchen channel is 20 bars, right? I'm using 4 bar. Yeah, no problem. You can try. From the entry testings, Donchian channel give me the best result. Not moving average, not MACD. Yeah, the Donchian channel. Yeah, that's the reason why I stick to that. What is the minimum capital required for future trading? Yeah, Kelvin is back to the earlier slides. Determine your capital. Samuel, do you close position on midday break? There's also a gap that might happen. Okay, Samuel, yes, for MPOB day 10 of the month. Yeah, so the MPOB usually will have result of data announcement during 12:30. So usually 10 of the day we will avoid trading. We will come to this again. So time filtering, calendar day filtering is one of the keys for trading plan as well to plan. If you do intraday trading, yes and no. Yes and no. Yeah. The current movement is in huge volatility. So definitely there will be a gap because your soy oil, your Dalian will still trading. Yeah. But high volatility is good for trading. If you want to split into morning and afternoon, you actually have less price movement. Remember just now we have 24 bars a day. So the more bars is actually on the second session, it's not on the morning session. So if you try to avoid that, maybe you can try to only do at the afternoon session because afternoon session has more trading movement. Kelvin, trading age is from the trading idea. The trading idea must be logical sense and statistic sense. So today the trading age is on the risk reward ratio that equal to 2. Stop loss at the lowest point at 4 bar. No, stop loss is following 1 ATL from your entry point. Can I just trade FKR with 4,005? Depends what you are trading. If you are scalping, why not? If you are trend following, your risk is more than 5 points. The answer is no. I'm using 4 bar high, 4 bar low, and that relevant indicators called Donchian channel. Yeah, but actually it's nothing to do with Donchian channel. We based on Sam is asking, we based on a previous ATL range, we based on the signal bar range. Okay, so don't worry when I show you the trading plan, you will know. And the third session on live simulation will practically use this trading plan on the live chart. So you definitely can see when to enter, when to park your OCO order. Stephanie Chow is asking 4 bar high, 4 bar low, 50 minutes proven. I don't know, you should try from my statistics. It seems like working. Can it also be applied to 1 minute chart? The answer is yes and no. It depends what you want to do. Really, it depends on what you want to do. You want to trade 1 minute because your behavior is a scalpers. If your behavior is a scalpers, you shouldn't use trend following there. You should trade with order flow. Yeah. Can we show only certain candle time bar in trading view? Why you want to do that? We want to know the entire trading hours, what will perform with our trading plan. So if we do that, is just try to understand during the morning session, what will be these trading strategies will result. And if it's come from that angle, it's a very good idea. It means you are doing time period, which hour give you the most profitable. So I did this before for this trading strategy. It's usually from 11 onwards or from 4 o'clock onwards, it will give you the better result. ATL is the average range of the given time frame that you're using. If you are using 15 minutes bar, it means every 15 minutes, what will be the average range the market can give you? It represents volatility of the given time frame. What does it mean by order flow? Order flow, it means by every bid ask happening, queuing in the market, and every transacted every transacted price, either it hit the bid or hit the sell, that is order flow. So that gives you an instant understanding of the market buying or selling strengths. That is best for scalping. Using technical indicators, don't really able to do that, but the data must monitoring on the bid ask, on the time and sales to really give you the edge, not technical indicators on scalping. Okay, so we definitely need to do some enhancement by looking at the result. So too many trades, 2,800 trades, and the issue is 44% winning ratio. We will need to improve that. Okay, so that process is also quite long. It takes me like 1-2 months to do that. To place a filter that really can improve my result, it's difficult because we have so many indicators there, and most indicators are trends indicators. So the result will be the same. If you use trend indicators, the result usually will be around 45% to 50% winning ratio. You want to go above 50, you will need kind of statistics logic. I try ADX, I try Ichimoku Cloud, I try moving average, crossover, MACD, whatever you need. So a lot of Excel, put the indicator, the result, then throw. So never open the Excel again. Until I found this Bollinger Band. I'm never a Bollinger Band fan, but it actually improved the result. I don't know it's by luck or what. Or maybe the other indicators I tested, I didn't use in the right way. So it doesn't improve the result. But Bollinger Band, it does. But try to implement Bollinger Band into my trading plan to improve the field, improve the winning ratio, things like that. Actually, it takes quite some time. Yeah. Even I have found, the result is improved, but I'm not satisfied. It takes me some time. So I try a lot of ways to use Bollinger Band until I remember what my statistics teacher tell me. And that is the entire basis of Bollinger Band. Bollinger Band is actually derived from normal distribution curve, the statistics angle. Two standard deviation, if you still remember things like that, a bell curve. So whatever data you average it will be a bell curve. It means 95% of the time it will move into a confidence interval. If I still, my statistic teacher still feel very proud, I still can remember all this glossary. Yeah, two standard deviation of confidence interval. It means 95% of the time the price will move just within range 95% of the time. Okay, so if we are able to use some indicators to define the -2 standard deviation and upper 2 standard deviation, we can actually know when the market will move. Okay, so let me give you an example. Okay, maybe I talk like that, very difficult to understand. So it means 95% of the time the market will move like that. Okay, then only 5% of the time it will touch the upside or the low side. But of course, this is just illustration. Okay, and if you are trend following, you are doing trend following. Just now we have a questions on I think from Stephanie. If you are doing trend following, okay, you shouldn't trade within here. You should trade here and here. Okay, why? Because these are the 5% time, and there's only 5% of shouldn't put it that way. It means the price, if coming into 2 standard deviation, it means it will have two things happen. Either it will break out or go back to the range. Yeah, things like that. Yeah. So when we do trend following, we want the market to move. Either it move out or move down, doesn't matter, but we want the market to move. So if let's say I have a buy signal somewhere in between here, it will be worse off if I have a buy signal here or here, correct or not? Yeah, that's how I use that angle to filter the signals. Okay, and Bollinger Band did that. But of course, not only Bollinger Band, there's a lot of indicators actually telling the same story, 2 standard deviation. So the 5% things, the 2 standard deviation away is where things will happen, mean reverting or trend. Okay, so very simple, same data set, put one more filtering there. The signal bar must come during the upper band and lower band. Okay, then the exit is still the same because the exit have his age already. We didn't change it, but we want to improve the result is on the entry. So this time, we put Bollinger Band there. Let's try. Okay, so this is the same illustration sample that you see just now, and without Bollinger Band, these are the signals we will take in the Excel in the testing. But with Bollinger Band, definitely you can see there are some signals here. We won't take with Bollinger Band. So like this. These signals happen in between Bollinger Band. It's not at the 2 standard deviation, so we won't take this signal. Okay, this one we will take because it's lower than the previous Bollinger Band, lower band, or the current band. It doesn't matter. This one we won't take. We won't take this. We won't take this. We won't take this. We will take this. We won't take this, and we won't take this. Okay, so you see from an existing plan, 1, 2, 3, 4, 5, 6, 7 signals, we will only follow 1, 2, this one, and this one. This is what Bollinger Band did to our existing trading band. Okay, so after that, only 2 signals left. Okay, and the most important one is there's always trade-off. It means there are times the Bollinger Band help us to filter bad signals, but it will also filter out the profitable signals. But that doesn't matter, you know. But in a huge data set, we want to see this happen when a lot of bad signals will filter more than the right signal. Then it will actually improve the result. Okay, so let's see what happens. Okay, so this table, we have 2 tables here. This one is without Bollinger Band, and this is with Bollinger Band. Okay, so the first data set is where we illustrate earlier. Okay, we earn 5,007 points. Remember that 125,000. We have 2,600 trades. We have 44% winning ratio. Yeah. Okay. If we Bollinger Band, yeah, we actually have 600 point less profit, but the trades reduced from 2006 to 1002. It means in that 1,400 trades, there will be 600 points that I have give up with Bollinger Band, but I reduced 1,400 trades. 1,400 trades can mean a lot by looking at trading cost itself or trading psychology itself. There's few angle. When there's less trade, but you can retain a profit, is a very, very good things that we want to continue. Now, of course, when you can retain most of the profit, you have reduced more than 50% of the trades, then your winning ratio will of course increase. Yeah. Then your drawdown will also reduce. The maximum drawdown period is 100 point. 100 point is like 200 point, 2,500 drawdown. Then it will reduce to around 70 point, which is also an improvement. It means Bollinger Band help us to exclude all the white noise, all the bad signals. Okay. Oh, okay. So the trading plan of today, okay, we will stop here. This is the trading plan that we discussed. So, of course, we still need practicals practice in the 3rd session. So today's sessions tell you the basis, the process of putting each puzzle, putting each brick in building trading strategies. Everything must be carefully managed. Then only we can have a good result or have a workable trading strategy. So this is only one angle. It can be a lot angle, and everyone have a different objective. It will drive with different angle. So today we talk about the basis of these intraday trading strategies. The 3rd session we will dive into how to use it, okay, and how to use TradingView to test these trading strategies. And there's a playback function there, and there will be 4 books that related to today's topic, especially systematic trading development. A lot of people have only focused on trading technique, technical indicators, which will ignore the importance of money management and also the process of systematic trading. So basically, you should read books that more than technical indicators. For example, like this. For example, like this. Okay, this will tell you the importance of money management. Even way of turtle, but read the Michael Covell, that one. Okay, not this one. So the next session, we will do paper trading. We'll do paper trading. Definitely, we will cover the last two box that try to understand. After we did testings, we'll try to link it to the real world. The real world will comes when there's a paper trading. The paper trading will tell us what should monitor. So like economy calendar in FCPO, we should monitor. Yeah, we should ignore 10 of the month. Yeah, because MPOV data will be announced. Or there are some very good questions like should we avoid morning session? These of the things it can be tested, it can be statistical driven. Okay, if you try to improve it, but sometimes you will just need to live with it. There are 5% of the time market hit your cut loss and you will hit your profit target later. 5% of the time. So this is rare because it's only 5%, but this happened. What it means is the world doesn't perfect one. When you live in Earth is like that one. So live with it. Don't try to do some things that try to avoid it. When you try to avoid it, you will also have a trade-off. You give up some profit maybe. Okay, so let me take some questions. Have you tried intraday trading using purely observing naked chart? If I do intraday trading, I will do order flow. I won't do chart. Chart will help me during the pre-market session to identify the importance equilibrium level. It means the important support resistance level. Those previous historical pricing that important support resistance are the easier way. Yeah, or volume profile can do that. Tape trading is order flow trading. Can we put all these criteria in trading view? Let me see. I think trading view cannot. Oh, maybe can. Okay, see. Wait, let me switch my screen. Okay, so trading view actually give you option to select the parameters. Okay, I'm sharing the right screen. So okay, so the parameters, yes, so you can set the alert on your required parameters. Let me switch. Okay. Okay, so you can, yes, Sam, you can do that. So basically 4-bar high-low, Donchian channel, I change it to 4. So I can actually use Donchian channel to do that. Yeah. Or Bollinger Band. Yes, the alert can be set like that. Calvin, you can definitely do paper trading in trading view in QST or AES for demo. So the answer of what time frame to use is depends on the capital, depends on the market volatility that we mentioned earlier. Okay. Yes, trading will have real-time data. Like myself, I'm a subscriber user, so I pay $1 per month for Busa real time. Okay, Sam, so you need to put the indicator in the screen. So you see Donchen channel. So I put 4 here. Okay, then look at the alert there. Okay, click alert. Crossing Donchen channel. Click 4. Okay, once per bar, once per minute, it's up to you what you want to set. Basis, upper or lower. So you can actually select, if let's say 2, right, you need to put 2, upper or lower. But Donchen channel is one of it. The best way for this trading strategy is to put Bollinger Band. When it's upper band, lower band touch, yeah, it means there's a rally signal maybe you want to enter. So it can be notified on apps, can be email, up to you. Yes, okay. So before, please join the next session. We'll do the practical part. We'll do the simulation. Okay, join the last session. It will be 6 March, same time Saturday, 9:30. So that will be the last part of this session. We will use TradingView to do live simulation, and I will show you I think it's one filtering in the trading plan. I'll show you a few filtering. One is the low volatility setup. The second one is high volatility setup, and the third one is what kind of day that we need to avoid for trading these trading strategies. Then you can see the past few months result. Okay, thank you everyone. So after you end this webinar, there will be a survey. Tell us what you want. Tell us what is missing in this webinar. Thank you. Terima kasih. No, Cheng, you don't need to subscribe TradingView. You don't need it because it's for simulation purpose. Yeah, I subscribe TradingView so I can use the playback function for intraday, but you don't need to. I found we actually have different webinars. We even have spread trading this year, but the spread trading setup is way lesser than the technicals are related. But even like these webinars is not really put in the manner of tell you this is technical. The Malaysians is still very technical driven. Maybe it's because the retail market is being flourished currently, and the beginning of tools people will look at is definitely technicals. But once you come into technicals, it's definitely not sufficient. Yeah, that's why I split this into 3 webinars to tell you the money management, the process, things like that. So technicals become something that it's not the entire edge. The edge could be, it's like a tools. The edge could be from the money management. Yeah. So, but technical is still very important because of our demographic. So maybe I will try to build some technicals there. Okay, give you an angle of technical indicators and also emphasize on the importance of systematic trading. So basically, these 3 webinars is more than technicals. It's like how to apply it in a reasonable manner. Yeah. Yeah, spread trading. We did that on last month, and I will be doing that again. Yeah. So the second quarter will be focused on spread and technicals. I do that. Then the third quarter we will do this systematic trading again.